guys, an ETH ETF possibly is on the horizon. So we just wanted to make this video to prepare you for the best case scenario and the worst case scenario. In this video, we're going to cover what an ETF is, some of the applicants that are applying for an ETF, how likely it is that an ETH ETF gets approved, what to expect if it gets approved, what to expect if it doesn't get approved. And then we're going to talk about our view of the future of the crypto landscape after an ETH ETF does get approved. Because even if it doesn't get approved on this deadline, eventually it is going to get approved.
Am I still on the camera?
Yeah. Here, I'll put it up here because that was just the intro. I just need to see how that is.
You know the deadline?
It's multiple deadlines.
What's the first one?
May something. I'm going to pull it up here.
I'm going to add to the intro.
You ready, bro?
Say it again.
You ready to get into it, bro?
Yeah, and I will go out on a conservative limb and say it's for sure getting approved. Hands down. Hands down. Okay?
All right, let's jump into it. You want to start off by explaining what an ETF is? So he doesn't know. Say no.
An ETF is a form of an exchange-traded product. ETFs are the most popular. They're among the most popular with institutions, as you guys have probably already caught wind of that. Technically, they trade 24/7, although they operate just like your normal equities market in that, they have breaks, cutoff times, whatever you want to call it. And so they're an exchange-traded product. They're usually used by institutions as like a conservative investment, so that way they don't have to speculate on idiosyncratic stocks or equities or assets in general, because you have ETFs for damn near every asset now. And it's just a more safer way to gain exposure across a broad swath of assets in one asset class.
Yeah, so with an ETH ETF, institutions like it because it's going to offer them the ability to own ETH and be able to experience from the price appreciation without taking on the security risk. So essentially what you're buying is a share that represents actual ETH that's held in cold storage wherever they're storing the ETH.
And in these ETFs, they usually have buy-in minimums. So one common one you'll see is like $100,000. They go up, they go down too, but generally they go up with some of these larger ETFs that we'll probably be covering.
So guys, as you can see on the screen here, there are multiple ETF applications with multiple deadlines. The soonest one is at the end of May, but the biggest applicant, no surprise here, is Blackrock.
We already know how that works out.
So Blackrock is betting on Ethereum in a big way in multiple ways. So they already have a Bitcoin ETF that got approved along with the other Bitcoin ETF applicants. And they filed for an Ethereum ETF, right? Now, the crazy thing about Blackrock ETF applications is that they filed over 500 and some change, and they've only been denied once.
Let me put it this way. Larry Fink, the CEO of Blackrock, is probably the most powerful financier in the world. And so the fact that he's already went and filed, it gives not just me, I'm assuming it gives other investors and markets in general a huge amount of confidence that, okay, this is going to pass for sure.
So getting back to Blackrock betting on ETH in a big way. In addition to filing for an ETH ETF, in addition to getting approved for a Bitcoin ETF, they're betting on crypto, period. They also seeded their RWA fund on ETH, and they sent $100 million in USDC to their wallet that you can verify on chain. And the minimum to invest into this fund is $100,000. So they're betting on ETH with an ETF, with their fund, and just betting on crypto in general.
And I just thought about this actually. They're creating a kind of an ecosystem for their investors. So they've seeded $100 million to their RWA fund built on Ethereum. Now, of course, they're going to be bullish on Ethereum because they know what type of pool they have, what type of weight they have when it comes to asset holdings or AUM in the trillions, 10 trillion, probably more, but that's just what we're aware of, 10 trillion across multiple asset classes. Now, the ETH ETF is an opportunity for their investors who has, however much money they have, is also an opportunity to get broad exposure without investing into individual ETH projects. So that allows their investors to get broad exposure across Ethereum with all these dApps without taking that speculative risk on each dApp.
Now guys, at the time of shooting this video, there are 7 active applications right now with decision deadlines going from May all the way to the end of the year. But now that we talked about that, let's talk about what could prevent an Ethereum ETF from getting approved? Because it is a little bit different
Nothing.
from Bitcoin.
No, I'm just
no,
playing.
it is a little bit different from Bitcoin.
And to be clear, it is a spot ETF. I'm sure you guys already know. It's not a futures ETF, so that means they're going to have to buy Ethereum as well and hold it on their books.
So guys, the biggest hurdle that they're going to have to get over in regards to getting this ETH ETF approved is all due to staking. So as you guys know, Ethereum moved from proof of work to proof of stake, which essentially changed the way that the network comes to a consensus from using brute force and pure computation to whoever has Ethereum, they can stake it on the beacon chain, and it's a for how much you stake versus how much computational power you can output to get selected to add the next block to the chain. And with staking comes staking rewards. So on March 18th, Fidelity added an amendment to its proposal to allow traders to actually stake some of their assets held. And then a day later, Grayscale amended its applications to add staking as well. And I'm sure most of these other applicants are going to follow suit. And as I'm sure most of you know, last year, the SEC cracked down on staking. They fined Coinbase, they fined Kraken $30 million, and they forced the company to shut down its staking as a service business for not following securities law. They sued Coinbase for its staking offering, and the litigation is actually still in process. So when investors provide tokens to staking as a service provider, they actually lose control of the tokens, and then they take on additional risk associated with those platforms. With very little protection, because this thing is kind of still early. So in the context of Ethereum, where investors actually don't hold the tokens, instead, like I said, they get shares of a fund that pool their resource together to essentially create this. When you factor in staking into this, it adds an additional layer of risk, because now you're trusting the custodian who's holding the Ethereum, and now you have to trust that the custodian is going to select the proper staking validator. You have Coinbase, you have Lido, you have Rocket Pool, which is like decentralized staking. All of this adds an extra layer of risk, and if something goes wrong with one of these validators, it can make the actual ETF applicant, like a Blackrock or a Fidelity, it can ruin their reputation, essentially.
Yeah, so I would slightly, not even a disagreement, but I guess I'm just curious. So with all those fines from before, so Kraken, they're centralized. You saw the CEO, that guy's on Bloomberg all the time. With Coinbase, obviously, I don't even have to say it, they're super centralized. They're a government exchange. And so when it comes to staking with those guys, you're kind of relying on their efforts for appreciation in your token, or gains in your token, or rewards in that token, whatever you want to say. You're relying on them. In Ethereum, there isn't one person you're relying on. Vitalik Buterin doesn't even, I haven't seen the guy speak in a while, maybe because I'm not looking, but I haven't seen him speak in a while, so you're not really reliant on any one person. Yeah, they have the Ethereum Foundation, but they are nonprofit and a separate piece at the end of the day. And so, I'm sure, not Larry Fink himself, someone in his team has this and kind of made this distinction that, okay, because we're not reliant on one individual or a central entity for staking rewards or gains in the price, okay, maybe it would bypass the Howey test, and maybe that's what gave them confidence to go ahead and file the ETF for Ethereum.
Yeah, and it's also possible that it could get approved, but they could just say, hey, you guys can launch a ETH ETF just like with Bitcoin, but you guys just can't stake it. You can't offer a stake as a service platform. And I wouldn't be surprised if that happened and then staking gets approved later. But I do feel like staking is going to get approved, because I feel like it's going to slowly but surely become the free rate in crypto. Like, perfect example, like we just said, BlackRock seeded their fund on Ethereum. So BlackRock is trusting Ethereum. Just like back in the day, people used to say, oh, you'll never get fired if you buy IBM. That's that same kind of reputation / aura is developing over Coinbase as an exchange and Ethereum as a network, because if everyone's using Ethereum, people like BlackRock, they know people are going to follow suit, so they know that the staking rewards are going to continue to be consistent. So, and then they know that mainstream financial institutions are going to want to get access to a 13% yield that outpaces inflation by a huge multiple.
Yeah, remember, guys, this is all speculation. We're not like insiders. We don't have people inside of BlackRock telling us anything. We don't have anything. This is all speculation based off our own research. And, I guess I would disagree here. So I will give a slight pushback. I'm not going to say disagree. I'm going to start saying pushback. So I'll give a little slight pushback on that, in that and we talked about this before, I don't think there will ever be a risk-free rate in crypto unless it's attached to some type of
On-chain treasuries.
On-chain treasuries. I was actually going to say government, but that even depends on the government. And so really, unless there's U.S. treasuries specifically, not Bohemian treasuries, not UK, the guilds and over in the UK, none of that stuff. It has to be U.S. treasuries, and that's what the risk-free rate is, because inherently, anything on the blockchain, I think for its entirety, is going to come with risk. Even on the Ethereum platform, maybe in like 2070, maybe that risk is now eliminated, in 2070. But for now, for the foreseeable future, anytime you're investing or staking money into any protocol or asset that is built on the blockchain, unless it's U.S. treasuries, it's not risk-free. That includes real estate, that includes private credit, that includes everything. The only thing that's risk-free is the actual risk-free rate of the world, which is U.S. treasuries.
All right, now let's talk about what we think can happen if it gets approved and if it doesn't get approved. Let's start with the devil's advocate perspective. If the ETH ETF does not get approved, it'll just get approved later. I think there will be a short-term dump because the deadline is like after the halving. So it might not even be a dump. The market might just brush it off and be like, fuck it, we still going to the moon with or without the ETH ETF. But I wouldn't be surprised if there's some kind of dip, especially if, investors start to price that in, which I think they will in the coming weeks. If it does get approved, bro, we're pumping hard. I think we'll see like a 6K Ethereum. And the reason why I say that is because when the Bitcoin ETF got approved, we saw Bitcoin reach
on the build up as well.
Yeah, on the build up, but after it got approved, we saw Bitcoin reach all-time highs before the halving, which has never happened in history. Ethereum has a much smaller market cap, so it's going to take way less investment capital for it to reach all-time highs. It's also a utility and not a store of value. Utility trumps store value all day long. That's why they call Ethereum digital oil and Bitcoin digital gold. If you look in the real world, oil is worth more than all precious metals combined. Not only that, Ethereum has been upgraded multiple times to make it a better investment opportunity, such as EIP 1559 that added a base fee, and it makes it deflationary at certain times when network usage is high. Like there are times where there's more being burned in fees versus new ETH coming onto the market. So if this ETH ETF gets approved, you can believe that ETH is going to pump, and then ETH ecosystem tokens are going to pump, which includes most of the RWA tokens as well.
And we were just looking at the Pendle chart last night, and what was it, 600% over the last 8 months?
Yep, since we made the video in November, and if you watch, you're up 6x.
Yeah. I mean, with that, you got the combination of BlackRock's RWA fund seeding on Ethereum. All these RWAs are built on Ethereum. And then we're going into an easing monetary policy cycle. I mean, man, I can't make a more bullish case. I'm just generalizing right here too. I mean, I can't see a bearish case for RWAs in the next 5 years. I can't. There's only room for growth.
Unless Larry Fink just wakes up and says, actually, fuck all this shit. I was wrong.
Yeah, and he pulls it all, which he will never do. But damn, if he did, I'd be like, God damn it, Larry.
Last point, guys. What could the ETH ETF approval mean for the crypto world? I'm gonna put this into perspective for you guys. Ethereum is an altcoin. Bitcoin, everything in crypto came from Bitcoin. So we have the first altcoin ETF about to get approved. Just like Coinbase went public and now is paving the way for other companies to go public, this is gonna pave the way for more altcoins to have ETFs. And I wouldn't be surprised if there is a Chainlink ETF or some other crypto that is like super established. Like we're gonna see more ETF We're gonna see more ETFs start to launch in the coming years. Ethereum and Bitcoin is just paving the way.
I'm sorry, man. I keep giving you pushback on everything, but ETH is not a fucking altcoin. It's not
an altcoin. It's alternative to Bitcoin. It's not an altcoin.
An altcoin is something that's built on a layer one.
It's not true. Solana's an altcoin. It is a layer one. Cardano's an altcoin. It's an
semantics.
Altcoin. The word altcoin it's an alternative to Bitcoin. It's an altcoin. They're all altcoins except Bitcoin.
Okay, semantics.
Semantics.
It dilutes the value when you think of it that way in my mind when it comes to Ethereum, because Ethereum, I've been saying this for years, has way more inherent value than the Bitcoin network, 100%. I don't give a fuck. Last summer, you guys talking about, oh, we got oracles. We can put art on Bitcoin, blah, blah, blah.
Oracles!
Oh my God. I mean, not oracles.
BRC20s?
Oh, we got ordinals. Oh my God. Oh, fucking ordinal, bruh. It's the reason that it hasn't been gaining any traction. And yes, look, you're going to get some people building on it. Like, we live in San Francisco, so we know some people who are building NFT projects or meme coins on the Bitcoin network, but it's not going to make a difference. There's still the lack of inherent value when it comes to Bitcoin itself. Ethereum, on the other hand, I've always been the most bullish on Ethereum because I'm like, man, everything is going to be built on Ethereum. 100%.
I hope it's not.
And no, of course, most things are going to be built on Ethereum. Let's clarify. I speak in super absolute terms sometimes, guys, but here's the deal. Most projects will continue to be built on Ethereum, not Solana, not fucking...
Or ETH layer 2s, but still ETH.
Or, yeah, it's still ETH at the end of the day. They're not going to be built on a fucking Cosmos for the most part. They're not going to be built on a fucking Pulse chain for the most part. For the most part. That's a fact, no matter how you slice it. Most projects will be on ETH. Simple as that. Disagree with me if you want, but you're wrong.
We're gonna see how this video ages. In like 5
Yeah,
years.
we're gonna have to watch this one in 5 years. Yeah, this video is basically like full speculation. So
yeah. So guys, with that, we hope you got value from this video. If you did, drop a comment, drop a like, subscribe. Let us know your opinion on an ETH ETF. Let us know if you think we're looking at something wrong, if you look at something different. We welcome all constructive criticism in the comment section. But with that, we thank you for tuning in. Last thing, subscribe to my personal YouTube channel, Crypto Noah, because I'm going to be releasing an ETH ETF yield farming strategy video a few days after this one that's going to help you generate passive income on ETH based on if it gets approved or if it doesn't get approved. It's a strategy that I show you on how you'll be able to make a lot of money no matter what happens. So definitely subscribe to my channel.
And subscribe to my channel as always, J Manchin. We talk about macro from the Federal Reserve on down, make everything make sense, and we bring it home. Last video was on the Goldilocks regime, and that will help you determine what investments would favor or be favored in a monetarily easing environment.
Thanks for tuning in, guys. We'll see y'all in the next video.